You've been trading for any length of time, you realize that a trading plan is important. Everybody talks about what it is, but how does it actually work and how do you actually implement it into your trading day? Our guest today, Todd Gordon of forex.com, is going to talk to us about that. Todd, thanks for being here.
Thanks, Tim. Nice to be here.
Well, one of the things you do in your Strategy of the Day newsletter is it's very obvious that you are planning ahead, always planning ahead, so that when something happens, there's no guessing in the moment. You're ready for what happens. How does that help you as a trader?
Well, the biggest thing you can do to improve your trading is start to anticipate. Too many new traders start to react to their emotions. How many times have you seen a market move higher? You're like, boy, I like this market higher. You see it inch higher, you see it inch higher, see it break out. Finally, the minute you decide to get on board that trade, it's exactly the time it reverses. And as soon as it pushes lower and you're saying, oh no, what did I do? As soon as it reaches that pain threshold that you can't take it anymore, and you cut the trade and get out, is usually the bottom. Okay, so that's reacting to your emotion. You need a good methodology, something that you trust, something that you can fall back on when the markets are really moving, and you say, I anticipate this to happen. I think the market's going to change or turn here. If it happens, this is exactly what I'm going to do. I have my stop loss here, and I have my first and second take profit already in place. So if you can anticipate what you think is going to happen in the market, you're sidestepping the emotion, you're stepping aside from the crowd, you're really being one step ahead of the emotional crowd, and you're anticipating their emotional reaction. Two things are going to happen. Either you're right and you take advantage of a huge market herding mentality towards one direction and the trade works, or you get stopped out. But it's okay because ahead of time you knew your entry, you knew your stop loss, and if you're wrong, you're going to lose this much. And if you're right, you're going to make that much, and that's all trading is.
So on every side of the trade, are you always anticipating, if this happens, I'll do this, if that happens, I'll do that?
Absolutely. Trading is just a big conditional if-then statement. If this happens, if it moves into my target zone, I want to see confirmation from my related market, I want to get exactly in my price, and that's it. So most of the time, if you find yourself trading with market orders, or if you're just clicking the buy and sell button, it's really no different than sitting at the table in red or black. If you are trading away from the market, or what I call with limit orders, if the market is here and you say, I only want to buy if it gets down to this price, you're anticipating what's happening. You're not reacting to the market. So if you find yourself trading with too many market orders, I think you're reacting to the market. Try using limit orders. Think away from the market.
One of the things I see you do very well is not beat yourself up when you're wrong. You just realize that the market is something that you thought and you're on to the next trade.
Absolutely.
How long did it take you to get comfortable with that and just realize that I'm just going to wait for the next opportunity?
Well, it was a two-step process. It took a while to be wrong for myself, but then it took a little patience to be wrong in front of thousands of people in research and then take the inevitable, you don't know what you're doing emails. But, it's trading. Okay? Anybody who stands in here and tells you they're right 70, 80, 90% of the time over the lifetime of their trading career has an agenda. Okay? Most traders are not right more than 50% of the time, but because we are anticipating what's going on in the market, you're identifying your risk, you're identifying a reward, your minimum reward on the first couple units of your total position. You just let the market forces take over, and if you're right 50% of the time, chances are you're going to make money because you're risking this much to make that much. And that's the only way you can do that is by anticipating what's going to happen.
Todd, thanks for being here.
Thanks, Tim.